According to some major analysts, now is the time to sell America. By that, of course, they mean American stocks. Trump is threatening the EU, so to speak, with the US, wanting to dominate a territory you would probably not expect. I mean Greenland. The conquest of Greenland is extremely strategically important for Americans because of its position relative to Russia. Trump is threatening the EU. Europe is talking about retaliation. The dollar is weakening and gold is rising. And now the important question. Is this the beginning of trouble or exactly the moment when money is made? Next, we'll look at one stock I'm currently eyeing for purchase, as well as another mess for financial advisors that will likely not end well for their clients. Hi, my name is Ondra, and welcome to another investment video. Trump is trying to get Greenland for America, and the markets are very simply pricing in this uncertainty and possible further tariff wars, causing them to fall. As you might expect, Europe does not want to give Greenland to America, so America is threatening tariffs. And big portfolio managers like Ray Dalio say that if the pressure on Europe from the US continues, Europe could sell off American assets and find another trading partner. And of course, it will not buy US debt in the form of US bonds, which are falling as a result. Gold is currently behaving as if it has priced in the collapse of the system and is rising. If we look at my public portfolio in Monera, currently valued at over $1.3 million, and this year's preliminary results, we can see that I am still in the black. The biggest gain this year is on the SCHDETF, which is the 100 largest dividend-paying companies in the US, and conversely, the biggest loss is on Meta. Looking at today's values, it is approaching prices that are interesting for me to buy into my portfolio, around $600. Just a few days ago, my portfolio was up by about $34,000, or about 3%, and thanks to the uncertainty, it has fallen like this. All these companies, as we can see on the map, are pricing in uncertainty. Investors are increasing the risk premium, and when the risk premium increases, stock prices go down. Not because companies have deteriorated overnight, Google has the same revenue as it did a week ago, but because the market wants a discount for uncertainty. You may have heard the phrase, sell America, that investors are fleeing US stocks, that the dollar is weakening, and that the world is losing confidence in the US. This sounds dramatic, but honestly, we've heard this story many times before. We heard it during the trade war with China, during COVID, during the banking crisis, during inflation and rate hikes. If you look at the long-term SP 500 chart, where all the major events are visible, you will find that there is almost always a reason to sell and panic. The world is so big and so many things are happening that there really is always a reason to sell. But even so, if we look at the trajectory of stocks, it is clearly going up. The market has one characteristic. It always overreacts. In the short term, it overestimates risk. In the long term, it underestimates adaptation. This is where most people make a fundamental mistake. They confuse politics with investment. The president is not a business model. A tweet is not a company's cash flow. And the 4-year term is not a long investment horizon. Companies that make money for 10, 15, 20 years do not live from media, headline to headline. Tariffs, threats, and negotiations are short-term noise. Investing, on the other hand, is a long-term game. You may remember March to April 2025. When there were fears about tariffs, people were literally writing to me in messages, saying, "This time it's different. International trade is dead." On the contrary, I was posting videos about how this was an opportunity to buy cheap, high-quality companies for my portfolio. Looking back at the chart today, we can see that I was right. The market is up tens of percent from the bottom, and some of the companies I bought, Google, AMD, ASML, are up 100% in less than a year. America will continue to be the place where market alpha will be made in the future. Now let's be honest. The biggest mistake investors make today is this sentence: I'll wait until things calm down. But the reality is that when things calm down, prices are already higher. When prices are lower, no one wants to buy. If they asked Buffett today, I doubt he would say anything other than that he still believes in America, and on the contrary, he will buy America. The conclusion is that, based on Trump's behavior, this is most likely just a negotiating technique to gain greater influence over Greenland, probably for American bases, and to gain a better position vis-à-vis Russia and China. The markets will be volatile, which honestly would be a good thing for us conscientious investors who are looking for opportunities. I sometimes forget, even though I've been here for a few years, that there are still lots and lots of newcomers who are starting to invest and are joining our investor community. Now that things were going down, we got praise from our investor. This comment shows exactly why I am building this community, so that investors understand the context, macro, connections, and above all, are able to remain calm when others panic. At OK Academy, we don't deal with daily noise. We deal with why things happen and how to behave accordingly and make money as a long-term investor. The goal is to give investing a system and strategy so that you know what to do with your portfolio in any situation. One of the stocks I'm looking at more closely right now is Netflix, NFLX, which reported its results just a few days ago. I have a small position in Netflix in my portfolio, and it's possible that I'll buy more soon, which I would of course inform you about in OK Academy. Let's start with the numbers, because they are decisive. Netflix earned $45 billion in 2025, which is a 16% increase. The operating margin for the whole year was 29.5%, significantly higher than last year. And most importantly, free cash flow was nearly $2 billion per quarter. Now, let's talk about users. Netflix has 325 million paying subscribers. Over the past year, it has added roughly 25 million people. More importantly, viewership and engagement are growing. People are canceling Netflix less and using it more. That's exactly what you want to see with a subscription service. A big topic is advertising. Advertising revenue exceeded $1.5 billion and more than doubled year on year. Management says that in 2026, this means higher revenue per user without the need to raise prices. And now what scared the market and why Netflix lost several percent in a day after the reports. Netflix announced that it will increase its investment in content by about 10%. At the same time, it is limiting share buybacks. Why? Because it is preparing cash for a major acquisition of Warner Bros. In the short term, this means slower growth in earnings per share, less room for margin expansion, and that's exactly what Wall Street doesn't like. But now, for the important part. This is not a deterioration in the business. They're investing more in content to strengthen their library and maintain their long-term lead over the competition. Netflix itself says that even in 2026, it expects 12 to 14% revenue growth, further margin growth, growing free cash flow. So, to sum up for investors, if you're concerned about short-term price movements, these results may disappoint you. But if you're looking for a long-term compounder, I like Netflix at under $90 per share and may buy more. The story hasn't gotten worse. Before we continue, a short video partner. The year 2026 will be about big changes in the markets, interest rates, stocks, currencies, commodities, AI. If you want to stay informed and not be late, XTB has prepared a free ebook market outlook for 2026. In it, you will find the macroeconomic context, a look at the stock markets, currencies, and key sectors that will play a role this year. The link to the ebook is below the video. Something huge is happening for Czech business. As you may have already noticed, the IPO of the CSG Arms factory, which is now owned by Michal Strnad, probably the richest Czech the Czechoslovak group, is going public. This in itself is exciting. Arms manufacturers have had extremely strong years, thanks to the geopolitical situation and sharp growth in defense budgets. From a value investor's perspective, however, it is crucial to ask 3 questions. First, at what stage of the cycle is the company going public? CSG is going public after several record years. This means high sales, strong margins, but also high market expectations. Historically, IPOs after golden times are often priced optimistically. In other words, expensively. Second, business quality versus price. CSG is not a startup. It has real cash flow, orders, assets, and a geopolitically relevant product. This is a fundamental difference from speculative IPOs. However, if the price already implicitly assumes that the current boom will last forever, some of your safety cushion will disappear. And thirdly, the role of IPOs for existing owners. An IPO is not charity for investors. It is a way to monetize part of the value at a time of maximum market interest. That in itself is not a bad thing. As investors, you just need to know that the company is after your money and has no reason to sell you its shares below market price. Summary: CSG may be a high-quality long-term company, but not every high-quality company is automatically a good investment at the IPO price. For value investors, it makes more sense to monitor the valuation and wait for the market. An IPO is the beginning of the story, not a guarantee of returns. Otherwise, you will definitely find the stock at your brokers under the ticker symbol CSG. And it will also be on the Prague Stock Exchange, has stopped paying out money to investors. Edo Mr. Trade, a company that was supposed to manage assets in bitcoins, is not paying out investors. Of course, we don't know how it will end yet, but if the company that manages your money doesn't want to pay you, we all understand that it's not a good sign. According to unofficial information, the company raised between 1.5 and 2 billion crowns, mainly from Czech investors, through financial advisors, and today it is in trouble. I got my hands on a prospectus that financial advisors used to raise money for this company. You can see that the more money you put in, the higher the return you get, which is totally weird in itself, because there's no correlation between the money you put into something like a fund and the return you get. I really feel extremely sorry for the informed people who fell for it, and it is unbelievable that the network of advisors at Edo Finance actually sold this to clients. Really unbelievable. When we look at the Edo Group website, the motto seems quite funny in light of the new information. Unfortunately, this is not the only project on which financial advisors have collected billions and people have lost them. Another huge problem in the Czech Republic is corporate bonds from companies that are subsequently tunneled or go bankrupt. Let's face it, these financial advisor scandals will always be around. I would like to say something very important here that will hopefully save at least some people from trouble. Financial advisors are not investors. Most of them don't even understand the markets. Don't let people who don't invest themselves or who have no assets or money themselves advise you on your money. Seek advice from people or advisors who invest, have a history in the markets, and have proven that they understand it. Educate yourself about money and markets, and best of all, take responsibility for your money into your own hands. Invest it yourself, and such problems will avoid you. And so that you don't fall into the trap of financial fraudsters, so that you learn how to invest, so that you can put together a profitable portfolio and know what to buy for your stock portfolio and at what price so that you can make a profit. That's what my OK Academy, the largest investment community in the Czech Republic, is all about. It's about taking responsibility for your money yourself and investing it profitably. The link is in the video description.